Morning traders, welcome to the TMT Stock Market Strategy video for Monday, March 27th. Okay, well, the healthcare reform bill held the market hostage for 3 trading days. We really were in a range. You could still make money, but very, very tight. If you were fast enough, obviously, if you're a scalper, it's a different story. But if you're some sort of a trend guy, momentum trader, it would be a little tough because we really were stuck in a range. And at the end of the day, last minute, the health care reform bill was not passed, and Donald Trump failed yet again. Futures were down about 20-something handles in the overnight on Sunday night into Monday morning. We got some sort of a relief rally, but we're still down about 17 handles. So last Monday, if you looked at my video, I mentioned that we're looking for a pullback, and this was Monday morning prior to the week starting. As we do every Monday morning and every week, we send out these videos, which are basically research reports. So we were looking for a fourth wave minor pullback, and the fourth wave minor, yes, it did happen so far, and now we're getting the extension of last week's pullback / consolidation at the lows, and we need to see how this develops. I think from what we've been gathering on pattern, right, history repeats itself. I think they meaning the buyers of dips and the bulls, are going to spin this healthcare reform bill failure into a positive and try to get everybody to buy the dip yet again. That's going to really put the emphasis on what I've been talking about: one more rip, blow off top mentality to get everybody long again, even though the healthcare reform bill is a bust. Donald Trump hasn't really done much of anything on his campaign promises. If not, there are delays, and many delays, which is really to be expected. Really, it's the market's fault that the market has exceeded itself, really adding way expectations of the market or what he's going to do and how fast he's going to do it. So where do we get into an overbought state? We get into a market that's extremely expensive. PE's 26.3 times earnings, maybe a little bit less than that now, but still anything above 25 or below 10, if you were to the downside, is really unsustainable. Okay, earnings weren't so great. We get into that whole factor. Sentiment is driving the markets. So that's really one of the reasons why I believe we are on our fourth wave minor pullback, or the corrections. The corrections now into the fifth wave, which will be the final wave of this 2009 bull market, will probably end sometime in 2017. As far as the dates are concerned, no one really knows, but once we get closer to that capitulatory top, I can get closer to where I think the markets may very well top. As of right now, we're looking for the completion of that fourth wave minor pullback. We're getting that extension right now as of today on Monday, and we'll see if the buyers of dips come in. If the buyers of dips come in and start stepping in and buying the market yet again, and we'll see, as you know, the pundits of CNBC and Bloomberg and Fox Business News, and you name it, will say, oh, this is a buying opportunity. This is going to be a buying opportunity. So they're going to get everybody long. They're also going to get the shorts to try to short again, which they probably are shorting now, and eventually we'll capitulate and add fuel to the fire for this blow off top. Okay, this is something that only happens in very seldomly during the market years, and you could see 1929, 1987, 2000, 1998. Actually, there was one little one, and then of course the 2009. So at one point in time, this market will come to an end, and I believe it probably, once we complete this fourth wave pullback, we'll see how the fifth wave starts. That'll probably get us into sometime either this late summer, early summer to let's say October, where the markets are notorious for market pullback. So seasonality will line up with sentiment, and then of course we'll get our overbought readings again. Now the short-term time frames were extended, so it would not surprise me if we walk into the market and we get some sort of a rally today, or maybe not even. But if anything, shorting the market down here, down 20 handles, it really is a very tough thing to do, and it's not the high probability trade that TMT looks for. Okay, all right, quickly, as you guys know, I'm giving you free levels this week. Starting on Monday, we will not have the daily videos, only for subscription purposes only. I will be putting out a recap video for you guys to take a look at what we did for the week and what's to come and what we're looking at. Okay, that will definitely happen, but it will happen once a week, maybe twice a week if there's any added information. So for $15 a day for your daily strategy video, guys, it's worth it. There's just a lot of work that goes into these videos. We put out several other research videos. We do a Pro Trader Premier video, which if you are active traders, we have intraday levels that you can trade off of, support resistance that our algorithm spits out for us, and it's compiled with a bunch of data. It's not a trend line. This is something that we'll show you again during the course of the week. But sign up at support@tradingmarkettechnicals.com. Believe me, guys, research video here is bar none if you're really serious about making money in the markets. All right, daily SES. You can see here we did nothing. Right, we're still holding our proprietary price channels. These levels are still valid, and remember, these are daily videos, so you can swing trade off of these videos. Okay, but you can see here we haven't gone anywhere. Now we're below the 50-day moving average too as well. But we'll see. Let's see how this market reacts to price. Okay, on when the market starts to either start to look to get bought, or obviously we get sell into. So here is our intraday for our Pro Trader Premier video. We do all of the futures and all of the major ETFs as well. So we dial it down. Now these levels are good for any time frame. Any time frame that you guys trade off of, 1 minute, 3 minute, 5 minute, they are valid for all of the time frames on the intraday charts. Okay, up to a 60-minute chart. All right, and then here are the videos. If you remember on our last video, we had 2341 was our one area of support. And then we had it all the way down to 2332, excuse me. And and as you can see where the market stopped. When this broke down, guys, we like to get a back test before anything. But this was at the end of the day. As you can see, it was around 2:50, 3 o'clock. So there's very little time. But if you were quick enough and you wanted a breakdown, and you could take this down into a 2-minute chart where you can find a pattern, or a 3-minute chart, or a 5-minute chart to find a pattern. But I'm showing you a 10-minute just to give you some more data. But a lot of the subs trade off of a 3 or 5-minute on the ES. And once you get that little minor pullback, you could have shorted that on a breakdown, okay? Or you could have took that 23.32 and you could have bought that for the end of the day bounce. And that's really what a lot of the subs did. Took that 23.32. Now remember, when price breaks down, it goes away. We take this away. So that's why you don't see it now. But if you looked at Friday morning's video, you'll see our levels. Okay, so and if you have any questions on how to trade them, just give us a call. Email us at support@tradingmarkettechnicals.com and we'll get back to you. All right, crude oil, again, really the same. After a little minor breakdown, here is your levels for the top and bottom. Okay, same thing. Gold. Now, gold is rallying this morning, obviously, because of the fear trade, and it continues to rally. But that swing high here, this is the big level here that we need to watch, take out, and even base or consolidate. Or take a look at this level here. So this is the two areas I'm looking for. If we take this out, or we can hold this level and start to revert back up, that'll give us evidence that this low is true and valid and it's going to hold, okay? Because we have that higher low, and again, still that higher low here. So I'm looking for a little bit more evidence before we get involved. I do believe that gold is in the second stage bull market run here, all right? Next is going to be GDX. Problem is that why I'm a little bit hesitant is that GDX, usually the miners go first, has been very subdued. So we want to see this break out of this little swing high and ultimately 24.37, and ultimately here the big number is 25.83. Those are the numbers that we're looking for higher prices. That would give us validation that gold is indeed starting to move higher again. All right, spiders, you can see here we're clinging to the 50-day moving average. We are down now about 232, so we're well below that. Probably going to test this lower trend line area of this big bearish rising wedge. As you can see, we're coming into some oversold territory. We're still not quite there yet in RSI, so there's still some room to run to the downside. All right, that's your spiders 10-minute. IWM, same thing, guys. IWM here, really, the first area is going to be the 130.94. That's going to be continue to be valid on the daily chart, and then if we lose that, we're looking at the 61.8% retracement here. You could see that the indicators here at MACD RSI breaking down, lower lows and lower highs, same thing. So this doesn't look anything bullish. However, markets do turn around. It's all driven on sentiment, so remember that. And same thing with the Qs. Actually, this looks like a small little bear flag. Wanted to show you this to you guys here. And I'm not showing you really any indicators, which we do also on the once we get to next week. I will show you a bunch of indicators. Just that when we do the free video, we don't have a lot of time, but that will be also included in the $15, and of course the Pro Trader Premier video when needed. Okay, sometimes you really don't need them. It's just a lot of fluff. But you can see here, nice little bear flag. That should break down today, and we'll see where the market goes. Pay attention to the volume. Watch the VIX too as well, guys, and the transports. They've been breaking down along with the IWM. So a few things to keep an eye on for today. We'll see you tomorrow. Have a great day, and be profitable today.